Hey guys, Luis Moreno here. All right, what I'm going to share with you right now is a common problem that a lot of agents have, and they don't have a good enough understanding of these terms, and they are unable to break these terms down so that the insured can understand them. If you don't have enough knowledge on the subject, you can't dumb it down. So that's ultimately what's happened. So in the ACA world, there's 4 terms that you need to make sure you have down. Okay, I'm going to go over those in a minute. Before I do that, I want you to like my video. I want you to comment if you want to, and definitely subscribe to my channel. All right, so with that, these are the 4 terms that I think every agent needs to know and have a very, very good understanding of. You need to know what the deductible is. You need to know what coinsurance is. You need to know what the maximum out of pocket is. And you need to know what the copays, what that means. Because your insureds, they may or may not know, they may not have a very good understanding of it. So you need to know exactly how to explain what these are. And the easiest way to explain how they are is by taking a sample claim and just applying it. So I'm going to come up with some generalities here. So let's say that we run a plan, and I'm just going to do this. I'm going to put some numbers in here just for the sake of the demonstration. But when you run an ACA app, you're going to see different deductibles, different coinsurances, different maximum out of pockets, and different copays based on the quote that you're running. The household size, the income are going to greatly influence what these numbers are going to be. So what I'm going to show here is only for the demonstration purposes. All right, so let's just take, for example, let's say that the plan you're going to run has $1,000 deductible. And let's say that the plan you're running has an 80% coinsurance. And let's say that the maximum out of pocket is $4,000. And let's just say that you have copays for your regular PCP. Let's say that that's $10. And let's say that maybe a specialist copay is $25. Again, these are just examples so you can explain this to your insured. And also, of course, for you as the agent to understand. So let's take a sample bill here. Let's say that you go, they're hospitalized, and they end up with an even $100,000 bill at the hospital. How does all this apply to it? So in the ACA world, the first thing that the insured is on the hook for is the deductible. So usually what happens is when you're going to get admitted, if it's not an emergency, you've got a chance to go to the finance office. They want you to pay this $1,000 immediately. So you got to tell the insured, look, you're on the hook for this. Okay, that's going to leave $99,000 left over. Now you're going to go into number 2, which is the coinsurance. And these coinsurance values, or these percentages, are different with different plans. But in this example, it's an 80%, 20% plan. And what that means is that the carrier, the insurance company, will pay 80% of the bill. The insured is responsible for 20% of the bill. At this point, without you even getting the chance to, the insured's going to freak out. I got to pay 20% of 99? That's almost 20K. Are you crazy, Mr. Agent? I'm like, hold on, hold your horses. Okay, you have a stop loss, which is called a maximum out of pocket. The maximum out of pocket is $4,000. Okay, so you have $4,000. So this is what you need to tell the insured. Look, you've already paid $1,000 of the 4. You're only left with $3K left. That's it, $3,000. When your 20% of this value equals $3,000, then at that point, this $1,000 plus this $3,000, which equals $4,000, you have satisfied your maximum out of pocket. At that point, when this is satisfied, this plan switches over to 100% the insurance company, 0% you or the insured. That's the way you explain this. So you tell them, hey, it doesn't matter how this plays out. Your worst case scenario, assuming that you stay inside the network, is you're going to pay $4,000. That's it, nothing more. Okay, you can't complicate. I mean, that's just, at this point, you can't dumb this down anymore. Okay, now, a question that I get from a lot of my insureds. Well, if I have a copay of $10 for a doctor, or maybe $25 for a specialist, or maybe it's a prescription and it's a tier 1 prescription, and let's just say that the sample copay is $5. Do I have to pay do I have to meet the deductible before I pay copays? And the answer is no. If it has a copay, you pay the copay, and you do not have to worry about the deductible, the coinsurance, or the maximum out of pocket. They're like, yes, but guess what? Another question that this insurance got their thinking head on is going to say, all right, well, if I'm paying this money out, does any of this money get applied here somewhere? Does it get applied to the deductible? Does it get applied to the maximum out of pocket? And the answer is no and yes. Okay, these copays do not get applied to the deductible. These copays do get applied to the maximum out of pocket. So would this be a straight up, in this sample, let's just say that they've had 10 visits to the specialist. It's $250. Well, they don't have to pay $3,000. They're going to pay what, $2,750. So these copays do apply here to the maximum out of pocket. That's how you explain deductible, coinsurance, maximum out of pocket, and copays. Understand this, and you can explain any plan that you quote, and the insured should be able to understand. I do this with most of my insureds who have no idea how the deductible, the coinsurance, and the maximum out of pocket work. Here's the other thing. Not very few. The majority of insureds focus on the damn deductible. What's my deductible? What's my deductible? I'm like, you're missing a huge portion of this picture. Don't focus that much on the deductible. What you should be focusing on is the maximum out of pocket. That's the worst case scenario. That's what gets people to start thinking that these plans are horrible. Well, I met my deductible and I still had to pay a lot. It's not like a deductible for property and casualty for your home and your auto. Your deductible in those scenarios, you just pay it, and then the insurance company covers the rest. But you have to pay it every time there's an incident. This right here, guys, is annualized policy year, which is a calendar year. When they meet this deductible, then they go to coinsurance, and then they go to the maximum out of pocket. This is per calendar year. So if they've already met the deductible and they're hospitalized 2 months later, still within the same calendar year, they do not have to meet it anymore. They go to the next stage. All right, that's how this is explained, guys. All right, this is what leads to this explanation like this helps our insureds understand. And I can bet money, guys, that the majority of agents are not explaining that. All right, so again, I hope you got a good understanding of this. Do me a favor, like the video, comment, subscribe to my channel because I got a lot of good stuff for you. Thank you.